Welcome everybody to Volatility Trading Strategies. My name is Brent Osachoff, and I founded VTS in January 2012 with the goal of helping all of you crush the market and start making real progress towards your long-term retirement goals. Now, the primary way that I do that is what I call tactical rotation through volatility targeting. Fancy words, but what it means is I'm using my VTS Volatility Barometer to quantify the current volatility level in the market, and then I'm only holding the asset classes that perform best in that specific environment. For example, we'll definitely be shorting volatility during stable markets. That's when the trade performs the best. But as volatility rises, that's no longer the case, and we have to shift into a safety position like gold. And then in extreme volatility, we can actually take advantage of the market crashing and profit from allocating to long volatility. The point is, through effective volatility targeting, we can make sure that we are only holding the asset classes that perform best at that time. And the cornerstone of my work here is my VTS Volatility Barometer. Let me explain what it is and quite likely change the way you invest going forward. So I'm sure you've heard of the VIX index before, right? It's the most widely referenced and well-known volatility metric. But the problem is, it's just a representation of 1-month S&P 500 options. But the market is way more diverse than that, so if you do use the VIX index to guide your trade signals, it's simply not going to work. Traders will want to also consider looking at the VIX futures, and the cash VIX term structure, VIX 9D, 3M, 6M, and maybe the volatility risk premium, implied versus realized volatility. But there's also the Volley index, the VVIX, SDEX, TDEX, skew, average true range, standard deviations, exponential moving averages. So how do we decide which ones to pick? My VTS Volatility Barometer is a composition of more than a dozen volatility metrics that combine to be the best representation of overall market volatility that you'll find anywhere. That's what's responsible for my market-beating success for 15 years. Let me illustrate how it works. This is a chart of the S&P 500 going back to January 1st, 2011. That was the inception of my volatility barometer. Now, long-term, it's closer to a 9% return with a 55% drawdown. But since 2011, this is essentially what people are trying to beat, right? So what I've done is I've run a dirt simple test here where a trader is going to apply volatility metrics to short the volatility ETP called VXX. VXX is a product that's down 99.9% since inception, so finding safe ways to short it is obviously valuable. So the first test is a trader using the VIX index as a filter. We can see they'll only be short on 50% of the days when the VIX index was below its 50th percentile. The best signals according to the VIX index. Now, if we scroll over here, we can see the VIX index test signal significantly underperformed even just a buy and hold on the S&P 500. Now, sure, the VIX index does occasionally get it right. We can see a great period in 2017, which was one of the lowest volatility years in history. But overall, it's very hit and miss with a return of 3.77% and a maximum drawdown of over 61%. The VIX index is a terrible market indicator because it's not a comprehensive measure. But now let's run the exact same test using my volatility barometer instead. So here we have the exact same strategy structure. We're filtering for the lowest 50th percentile of volatility barometer values now and only being short VXX during those signals. Now, comparing all of them, the green line is the results using my volatility barometer, and it's obviously far more robust. Now a 29% annual return with a maximum drawdown of just 34%. It's basically 2.5 times better than the underlying S&P 500. And remember, that's with a very basic 50th percentile line and only one threshold, either short VXX or cash. Obviously, we can do far better than this, but it is just a proof of concept showing why my trading results have been so good for so many years. We're targeting just the best times to be aggressive. Clearly, this is a very big trading edge. But now I can show you a live example of how I use the volatility barometer. This is what I call my defensive rotation strategy. It is live within our total portfolio solution and currently has a 25% allocation. So it works in a very similar way, that volatility targeting I was talking about. During mid to low volatility barometer readings, those are the best times to be aggressive, and we hold the 2 times NASDAQ ETF called QLD. When volatility rises, though, that's when the market is ambiguous and will shift into our safety position of XLU utilities. And then if the volatility barometer gets to extreme readings in the top 10%, we move completely to cash. And then finally, there's a lowest volatility reading as well, and this is just to keep us out of stocks when the market is potentially essentially running on fumes. As you can see, volatility targeting with a very robust indicator that takes all aspects of the volatility complex into consideration, this is how you're going to finally start getting ahead with your investments. You've got to stop spinning your wheels with that buy and hold style investing. There's nothing wrong with holding stocks or short volatility during stable markets, but we know the performance is garbage when volatility elevates, so why keep holding them? You've got to be willing to cycle out of those dangerous positions and into the best asset class to match the current environment. Now, don't get me wrong, I'm not an active day trader. Each of our strategies averages just 2 to 4 trades per month. Portfolio-wide, we're talking about averaging less than 1 trade per day, maybe 5 minutes a day on average. Trust me, anybody from any background can follow my VTS portfolio, and there's a free trial down in the description below and also on my website. Tactical rotation through volatility targeting. I've been doing this a very long time, and my Volatility Barometer is your path to better investing results. So now you're ready to see how all of our strategies combine to form what I call the total portfolio solution. Again, no more than 5 minutes a day, but volatility targeting is the best way to ensure a smoother investing experience with a higher rate of return. So make sure you check out this video next. See you next time.